afternoon and welcome to the Office of Economic Development Business Information Session. My name is Margaret McGee. I'm the Business Services Manager. Business services assist entrepreneurs and business owners in starting and growing their business. We help in navigating through the different departments within city government to obtain permits and licenses. We also connect the business community with organizations that can provide technical assistance, incentives, resources, and other beneficial programs. One way we do this is to host business information sessions. These sessions are held throughout the year, and the topics are gathered from entrepreneurs, surveys, and other information we collect from the business community. This is a series of 3 sessions focusing on business funding, including JP Morgan Chase, local community development financial institutions, also known as CDFIs, and New Orleans Tourism and Cultural Foundation, also known as NOTCF. Today we have Mr. Peter Brooks, NewCorp's Loan Fund Manager, and Ms. Sharonda Hill, the Market Manager at TruFund Financial Services, Inc. They will both share an overview of their organization and business funding opportunities. To keep down distractions, I ask that you keep your videos off and mute your speakers. I ask that you place questions in the chat box and we'll get to them when we have the opportunity. All handouts provided will be shared within 24 to 48 hours after the meeting has ended. Because this is a small group, maybe we can start off by introducing ourselves and giving us an idea or sharing your business information with us. We'll start with Ms. Holmes. Ms. Holmes?
Good afternoon. I'm sorry, Miss Margaret. Can you repeat the question? I apologize.
No, I was just saying, because we have such a small group, I was just saying we could introduce ourselves and tell us a little bit about your business.
Okay, great. Good afternoon, everyone. My name is Keisha Holmes, and I'm just starting my business. It will be a food truck and a catering company. And I got this email link, signed up some stuff at my job, and I received this link on yesterday. So I just wanted to chime in to see what I could learn and to help me move forward.
Great. Mr. Johnson?
Hi, my name is Taj Xavier. I'm with Xavier Estates. We are a for-profit affordable housing development firm in New Orleans. We exclusively develop housing from the renovation of blighted houses or new construction for LMI or low-income, extremely low-income families.
Thank you. So now I'll go ahead and turn it over to Mr. Peter Brooks, and he'll be followed by Ms. Sharonda Hill.
Well, good afternoon, everybody. It's good to be a part of the program. Thank you, Margaret, for inviting us to participate. Speaking about access to capital is always fun for me. It's a passion for me, so I appreciate the opportunity to do so. What I'm going to do is hopefully I can get through this. Margaret, we have what, 25 minutes each or less than that? How much time? Well, I'll be able to get through my presentation in about 10 minutes or so. I'm just going to run through, since we're going to do Q&A after. I'll just run through, and if you don't understand something, just let me know. Or if you want to go a little deeper, we could do that as well after Sharonda's presentation as well. But again, my name is Peter Brooks. I'm the Loan Fund Manager at NewCorp. And as the Loan Fund Manager, my role is to evaluate loans that are coming in, make a decision about whether or not those loans could be approved or may need more work in terms of preparing it for approval. And then after that, I'll overall review the overall financial health of the portfolio. So that's my job as a loan fund manager. Now I'm gonna get into a little bit about what NewCorp is. NewCorp, as Margaret mentioned earlier, is a CDFI. A CDFI is a community development financial institution. We were founded in 1995, really as a result of the Harrah's Casino, land-based casino, coming to town. We were established by the city of New Orleans and several other stakeholders in the community to support small businesses that were looking to become vendors of Harrah's Casino. Margaret, are you going to follow through with me on the screen? Okay, I appreciate that. Thank you. Next slide. So I'll get into what is a CDFI. CDFI basically are financial institutions of all sorts, and I'm going to explain that more in detail in a second. But our primary purpose is to support small businesses that are in low income and underserved communities here in New Orleans, but throughout the United States. We provide financial services as it relates to affordable housing, small business startups, growth businesses, the full gamut of loan types you'll find in CDFIs. Our particular specialties at NewCorp, we have our arms around small contractors in particular with a fund called the Bill Nola Mobilization Fund, where we support ongoing contracts by subcontractors primarily who are working with prime contractors on infrastructure work throughout the community. And we also support, and you'll like to hear this as well, Taj, we also support small affordable housing developers as well. Outside of the contractors and developers, we support restaurants, retail stores, service business, professional businesses of all sorts. Our maximum loan is $250,000. We start at about $10,000. And we participate strongly in the state's SSBCI program as well. So again, we feel like we have products and services that could cover most of the businesses that come to us. However, if in fact there's a situation where we receive an application that does not fit our profile, we would refer to partners such as TruFund as well, who serve the same community, but they do it at a different scale than perhaps we would do it at NewCorp. So it's a good thing that both NewCorp and TruFund are presenting here today. Next slide. All right. Again, as I mentioned earlier, as a CFI, our mission is to promote small business lending and equity in the community. Our primary target markets are minority and women-owned businesses. And we also are heavily involved by way of that business. Our overall mission and focus is to provide economic development to the communities that we serve. And specifically the communities throughout New Orleans, but also throughout the state of Louisiana. Next slide. A little bit about lending and how we approach lending. So there are some things that needs to happen before you actually submit an application. And those are the things that I have on this slide called pre-loan considerations. We would ask the applicant to understand their business model. And that is basically be able to articulate in writing and verbally what it is your business provides, who it provides it to, what's your organizational structure, and overall, what is your value, your unique value proposition to the markets you serve. A lot of times people come to us thinking that they need a loan. Well, they may need a loan, but maybe some other sources of capital may be better applied before a loan, or maybe better applied after the loan. But to understand what the overall capital stack, or what we call a capital stack, would be in terms of meeting your needs, there's some thought need to be put into that to make certain that you completely understand what you're asking for as it relates to a loan request. So we like to make certain that we're lending to the need, not necessarily just lending to the dollar amount. So we want to make certain that anything we lend to you will actually serve the need and the purpose that you came to us for. So that requires, again, a good, clear articulation as to what that need is. The last bullet point there is it create a realistic timeline and funding plan. You know, one of the things we like to do is not only do we like to hand you a check, we also like to provide technical assistance and advisory services to our clients. And sometimes that may not be a quick 2 or 3 day turnaround. If in fact your request is pretty straightforward, pretty easy, pretty matter of fact, yeah, we could probably turn that around in 2 or 3 days. But if your project or your request is a lot more nuanced or more complicated and a little more digging and due diligence is required, then we would need more time to evaluate that with you. So you need to plan for that as a part of your loan application, making certain that you have enough time to go through this process, as opposed to coming at the very, very last minute saying, hey, I need $150,000, $250,000, and I need it 2 or 3 days from now. You're kind of putting yourself and us behind an 8 ball as it relates to being able to really digest your application. So keep that in mind before you submit your application. Make certain that your funding timeline is realistic as it relates to how you approach the bank. Next slide. What's involved in the loan package or your loan package relative to your presentation? Let's look at the business plan. The business plan is basically consisting of 5 major components, and those components I like to, although I got it written down here, I like to say this is the what, the who, the how, the where, and the result. So the product and service, again, a good, clear description as to what it is you're doing. What is the product or services that you're offering, and how is your product or service unique or different from the competition that may exist in the same market that you're going to serve. So in other words, we want to know what your true value proposition is. Why would the community support your business? And then we want to know what the market demand is. Like, do we really need another restaurant in this particular market? Do we really need another snowball stand in this, but do we really need another barber? And probably the answer to all of those questions are yes. But what we're looking for is you to articulate that need in your business plan. Illustrate to us why your business makes sense, especially if it's a new business. Now, if it's an existing business, been out there for 10, 15 years, then and you already have a track record, then this, the market demand scenario is a little easier to prove. But for a startup business, we really want to see you put a little more work into articulating what that demand is. Sales strategy. Look, everything happens and begins and ends with a sale. So while there may be a need for your product or service, we want to know how you plan to get your product or services to the hands of your customer base. So are you going to use social media? Are you going to use advertising? Are you going to use face-to-face? Are you going to do cold calling, door-to-door? Whatever that methodology is that you're going to deploy in selling your product, we need to understand what that is. And hopefully you have some metrics around that as well, to where you can, again, articulate to us, not only in telling us how, but showing us how that process will work. And then, of course, the nitty-gritty details. This is where the sausage is made. We want to know about your operations. We want to know about your workflows, your staffing, the facilities, where your business will be located. If it's a retail business, what location, why this location makes sense. What kind of traffic is going to come there. Why will people walk into your store and buy your product when there are other stores like yours, within 2 or 3 blocks from you. So again, what's the draw to your particular business? And then when your customer get there, how will you actually fulfill their needs? How will you actually deliver that product and service? And then it all comes down to the numbers. And we're going to get into the numbers in a second, but we're going to need to see from this business model that we just described in the business plan, how does this all filter out into the numbers? How does this all filter out to make sense, economic sense, not only for the bank in terms of how you're going to pay us back, but also for yourself. In other words, this financial analysis should make sense to you first before it makes sense to us. If it makes sense to you first, then it's probably easier to explain how it makes sense to us. But if it doesn't make sense to you, then it won't make sense to us. So again, it's got to make economic sense in order for this business to go. And I'm speaking specifically for the startup businesses. Now, if your business has been out there for a while, 2 or 3, 4, 5 years, and you have a track record, you have tax returns, you have all these other different documents we could evaluate, we could see whether or not this makes sense. By looking at your tax returns over the last 3 years, we could see whether or not your business is thriving, whether or not it's struggling, whether or not it's growing, whether or not it's right on the edge of profitability. So again, these financial numbers, that's going to be a part of your business plan. It's going to tell a whole lot of where your business has been, where your business can be, with the help of the loan that you're asking for. Next slide. All right, so this is I call this page the numbers. These are the documents we're going to need as a part of your loan application. We're going to need your P&L, your balance sheet for the last 3 years. And depends on the nature of your business. If your business is primarily a credit business, meaning that most of your products or services are sold on credit, we're going to need to see your accounts receivables, as well as your accounts payables. We're going to need a detailed debt schedule. In other words, if your business already have debts in place, we're going to need to see who those debts are payable to, and what are the terms and conditions of those loans, because that's going to go into a calculation to determine whether or not your business can actually afford yet another loan. A lot of times people get caught up in just making loans, and then they find themselves having too many loans outstanding. So we want to make certain that your business, whether it be a startup or whether it's an existing business, can afford this particular loan request that you're making. And so those first sets of financial statements that I talked about, those are internally prepared statements. Those are typically statements that are in the middle of the year. So if we're in 2025 right now, we typically want to see financials at least through June, right? So that P&L, that balance sheet, those accounts receivables and payables, bring those through June. But the tax returns, both business and personal tax returns, we're going to be looking at the last 3 years on those. So we're going to need to see 22, 23, and 24 business and personal financial statements from a historical point of view to include in your loan package for evaluation. Next slide. All right. Let me just say this before I get into this slide. the two areas that a lot of our clients have trouble with are the financials and the credit reports. The financials and the credit reports, those are the typical barriers to entry that you're going to face. You know, if your financials are showing, if your financials are not really available, that's an indication. But if your financials are available, but yet they're showing that your business is not profitable, your business does not appear to be viable, that could be a problem as well. So you really need to evaluate what your financials are saying to us before you submit your application. And here, if you got questions about what it is saying, we're open to having a conversation with you even before you submit your application. Those are all of the pre-loan advisory services that we can offer you before you even apply. So you say, look, here, take a look at these tax returns. Tell me what you think. You think I'm good for $100,000 loan? You know, we could do an analysis for you before you actually go to the trouble of applying. And you know, some people would call that pre-qualification. Yeah, that you could call it pre-qualification, but I would say it's having a conversation with your lender that could make the process a lot easier. Now, getting into the personal credit report side, again, this is usually a problem area for a lot of people, only because they typically have not reviewed their credit report before they applied for a loan. So if you know you're going to be applying for a loan, go to freecreditreport.com. You know, there's a whole bunch of different sources of ways you could get a copy of your credit report as well as your credit score. Take a look at it and make certain that it reflects what really is going on in your credit life today. So when we look at a credit report, we look at these things. We look at your payment history. We look at your public records. We look at your score, although we don't make loan decisions specifically based on score. There are some lenders out there that do, but we don't make loan decisions strictly based on your score. We look at a more qualitative thing more than just a quantitative. And then what we're going to actually do is we're going to take a look at the payments that's showing up on that report. We're going to run a calculation called the debt to income report. And that debt to income ratio is going to give us an idea in terms of your ability to take on more debt as an individual. Now you say, well, why are you looking at me as an individual when this is a business loan? Well, we're looking at you as an individual because you as a small business owner will be a personal guarantor on this loan. All right, that's a matter of fact. That's not something that you're going to be able to really get around. Most of the time, I would say 99.9% of the time, as a small business owner, you will be a guarantor on this loan. So what we're going to look at is we're going to look at you as a secondary source of repayment. And that secondary source of repayment basically means that if the business can't pay, let's say if the business goes out of business, will you be able to pay? And that's part of that process we look at with the debt to income ratio. And then we determine whether or not your report is or well, we look at the trend, I should say the history of your line items on that report to see if you did have some bad credit, maybe it's improving, or maybe it's getting worse. So I like to put your credit into 3 categories. And you might want to jot this down or at least lock this into memory. The 3 categories of this, and again, this is my own little evaluation. Either your credit report is ash, like ash, ASH, smoke, or on fire. And ash basically means that you had some problems in the past. Those problems have been dealt with. It's just stuff it's residue from the past. It may have been 3, 4, 5 years ago. You had problems. It's really not impacting you today. Okay, we could deal with that. We could deal with that pretty easily. In fact, we would ignore it for the most part. It's ash. It's something that you've gone through, you've dealt with, you moved on. If it's smoke, that means that, okay, you've had some problems within the last 2 or 3 years, but you appear to have dealt with it. The fire is out. You've dealt with it. You're digesting it. You're moving on, and it's going to get better. as long as we, time continues and you continue to make your payments and you continue to have good credit. Now, on the other hand, if there's fire, and when I say fire, I'm talking about you got a mortgage loan that is already 90 days past due. You got a car loan that was just foreclosed on or repossessed last month, or you got credit card bills that have not been addressed at all. That's fire. Meaning those are things that's going on currently right now in your credit report that you hadn't dealt with, and that's the reason why your credit score is 465, right? So those are the sorts of things that really need to get addressed. And I'm telling you, if you evaluate your credit report before you apply, then you could save yourself a lot of time and effort by saying, hey, I got credit issues. I may need to seek credit counseling before I actually submit this loan application. Okay. Moving on to the next slide. I'm getting close to the end, guys. Loan packaging. So when we begin to put all of these different things together, this is called the loan package. So you're going to complete a loan application. You're going to have your business plan. You're going to have your financial statements. You're going to have your tax returns. You're going to have your credit reports and any other supporting documentation that we may request. So, it may include contracts or any other supporting documentation. And all of that goes into one bundle of information. We go through an evaluation, and then we do what's called underwriting, which is on the next page. And the underwriting process is the evaluation of your application and all of the supporting information that we have. And so that's called Underwriting 101, where we review the application. We interview you, so remember I said that you need to be able to articulate your business plan both in writing and verbally. This is the verbal part where we're going to actually sit down and talk to you about what we see in your application, give you an opportunity to explain what your needs are, explain why you think this loan is going to be beneficial. And then we go into a loan committee. And in that loan committee, that's where the decision is made. Also, let me go back to the interview. The interview is your opportunity to shine. And you really should come prepared for this. Don't let this be like, oh, I didn't know y'all were going to talk to me about this loan application. Be prepared, because this is your opportunity to demonstrate your knowledge of your business. You would not believe the number of times I'm in an interview with someone and they can't demonstrate any real knowledge of the business, but they won $100,000, right? Those two things don't go hand in hand. Typically, when you lend money to a business, you're lending money to someone that is a relative expert at what it is they do. That's the way you build trust with your client, is to say, okay, yes, I trust that you're going to take this money that you're requesting and do not only what you said you're going to do with it, but you're going to make it work. And you're going to be able to pay us back. But if you can't demonstrate that you understand your business well enough to even articulate what your needs are, then that's going to be a problem. So again, I really, really strongly suggest that you come prepared for those meetings. And look, sometimes in the business history, things are not rosy. You may have had some challenges. You may have had some challenges on the financial side. You may have had some challenges on the credit side. Either way, be able to explain what those challenges are. Don't run away from it. Don't hide from it. Don't act like it never happened. Basically, just come in and say, look, this is what happened 2 or 3 years ago. I had a business partner. We fell out. Boom. That's why sales went down. That's why I had these major losses. But, I'm back up and at it now. My business plan works now with me alone and so forth. And now I'm moving forward. So again, if you had some challenges, go ahead and address it. Address it up front. Now be careful. This is a loan interview. This is not a counseling session. This is not, I should say, not a personal counseling session. You don't need to volunteer anything personal in these sessions, in these meetings. Just keep it business, keep it above board, because the worst thing you want to do is scare your lender. Don't scare your lender with a whole bunch of horror stories. Just keep it straight business and move on. Okay. All right. And that is the end of my presentation, Margaret. Hopefully I got it all done within a short period of time. Oh, one last thing, that feedback. If your loan is denied, in fact, we don't like to even use the term denied. We like to use the term not yet. Your loan was not approved yet. And what that basically means is that typically we'll give you feedback. We'll give you some homework to do to say, look, if you did these things and you came back, you know, that will improve your chances of being approved. If you take that in a positive manner and go and do the homework and come back, then you'll probably find that you're gonna get some benefits. So don't ever take a denial as the final say. Just take it as, okay, what do I need to do to improve on what you said is my problems, and then I'll go and I'll work on those things and I'll come back to you. That's the approach you should take. All right, now I'm done. All right, thank you, Margaret.
Thanks, Peter. And this is the contact information right here. We have the phone number 504-208-1700. The location is 2533 Columbus Street, New Orleans, Louisiana, 70119. The webpage is NewCorpInc.com.
Yeah, let me just say this: the address and the website is still there. We literally just moved last week, and I'll put the new address in the chat so everybody can see it.
All right, sounds good. And now we'll turn it over to Ms. Sharonda Hill. I'm going to stop sharing.
Good afternoon, everyone. How are you guys doing today?
Good.
Good. Well, my name is Sharonda Hill. I am with TruFund Financial Services. We are a CDFI. We are headquartered in New York, and we have offices in Texas, Louisiana, Georgia, Alabama, and New Jersey. I'm sorry, I'm trying to find this share button. Now, this is my second or third webinar today, and I have been sharing for some odd reason. I was literally staring at my screen like, where's the share button? But anyway, once again, hello everyone, Sharonda Hill. So a little bit about TruFund. Of course, we are CDFI. We're located, as I said, in New York City, Alabama, Georgia, Louisiana, New Jersey, and Texas. Our purpose. So what is your purpose? Our purpose is why we exist. We exist to assist small business owners and small businesses in low to moderate income communities. And we want to expand access to capital and resources to those organizations who traditionally would not have access to those resources. Our impact at a glance. Since 2005, oh, by the way, this is our 20th year in service. So 20 years of true impact. Over the last 20 years, we've loaned approximately $290 million. We've supported approximately 17,000 jobs. And our clients represent a rich diversity from being minority-owned, women-owned, and low to moderate housed in low to moderate income areas and or services low to moderate income areas. So let's talk about that for a second. What does that mean, Sharonda? So what that means is if your business, if we look at your address and your business is not located in a low to moderate income community or low income community, what that means is your small business services low to moderate income areas. So let's say that your business address is in one location, but you have a brick and mortar location in a low to moderate income community, or the people that you serve, or even your employees live, work, and or play in a low to moderate income area. So those are the types of small businesses that we look to fund and support. So TruFund's product and services. So what are our products and services? So we have three signature products here at TruFund. Our small business loan product, our True Access Contractor Mobilization Loan, and our real estate acquisition program, RAP for short. So small business lending. Our real estate acquisition, aka RAP loan, helps small business owners in LMI communities across 6 states to purchase commercial real estate with as little as we'll go up to 95% LTV. Available business has to be in operations for at least 2 years, with a credit score will go as low as 650. In some cases, will go lower. It just depends on the strength of the business, how well the business is doing, and how well the financials for the business are looking. We only require 25% owner occupied, which is huge because most banks and the SBA require 51% owner occupancy for commercial real estate lending. Our contractor financing, which is TruFund's contract mobilization loans, provides up to $350,000 in capital to help contractors cover upfront costs, like working capital, materials, supplies, equipment, things of that nature. So let's say you've won a contract with a corporation, or you have a contract with the LED, or a contract with Southern University or Xavier University, whatever. You got a contract, and your contract is worth $100,000. So what this means is TruFund will loan you up to 30% of that contract, $30,000, to mobilize, to get started on that contract. And why do we do this? Why would we do this? We do this because what we know about contracting and those that are in the contracting space, most of these entities, they usually pay between 45, 60, 90, 120 days. So if you are a contractor, some of you may have experienced not getting paid your first invoice or your first payout until up to 90 or more days after you've begun on that contract. Small business loan. So TruFund small business loan product. So we'll go up to $350,000 in flexible capital to support growth needs like equipment purchases, marketing, hiring, debt consolidation, things like that. So, AKA working capital. And we do not have a prepayment penalty on our True Access Contractor Mobilization Loan and our small business loan product. We can go as low as a 600 FICO credit score, because we do know that a lot of times small business owners are financing their business using their credit. And when your credit usage goes up, what happens? Your credit score goes down, right? So we do understand that. And so we take a look at the overall picture. We look at the financials of the business. We look at the credit score of the small business owner, and we're able to come up with a happy medium using those things. And it's similar to what Peter Brooks said about when you're interviewing or you're answering questions about your business to our lending team, right? So if you have a call with our lending team and they want to understand why your credit score is so low, but you have excellent revenues, things of that nature. So just be able to tell the story about your business, okay? All right, moving on. Do we have any questions so far? I see we have several people on the line. Do we have any questions so far? No questions? Okay. Next slide. All right. Access to capital helps with operational stability. What does that mean, Sharonda? Operational stability. That means that you have sufficient capital for your small business to cover daily operational expenses, such as paying payroll and managing your day-to-day activities, keeping your lights on, purchasing supplies that you might need for the day to service your contracts or to service your clientele and your customers. Without a constant financial strain on your bank account and worrying whether you'll be able to pay your employees or service your clients and customers. Innovation and investment. How can access to capital help with that? Capital empowers businesses to invest in new technologies or product development or innovative strategies that can give a small business owner a competitive edge. Now, what does investment into new technologies look like? That looks like if you are an architectural firm and a new piece of software has come out that will help you to better assist your clients when you're designing buildings, floor plans, site selection, things of that nature. And this particular new software will boost your business by at least 40% and will give you a competitive edge over other architectural firms in the market. If you have access to capital, then you can acquire that software and be ready to position yourself to garner more revenues, right? Product development. Let's say that you are a small business owner and let's say you are a small business such as a beauty shop or a barber shop. And let's say someone on your team or even you as a small business owner have come up with a fantastic product, a new product that will enter the market. Let's say you come up with a hair dye product that it will dye somebody's hair. And even though they have new growth, when the new growth comes in, instead of it growing in gray, it just stays black, blonde, brown, whatever the color choice may be. Well, that is an amazing product, wouldn't you say? So if you had the capital, you can develop that product and you can put it in the market, put it out on the open market, sell it to others, and boom. Not only have you created a new revenue stream for yourself, but that could be launched and parlayed into a whole other business venture, right? So those are the things that we talk about when we say that access to capital can help you with investment and innovation. Scaling opportunities. With access to capital, small businesses can seize growth opportunities by extending into new markets, increasing production capacity, or launching new product lines, like I just talked about. But let's talk about scaling. Let's say you are a beauty or barbershop owner, and you've been looking at a strip center that's on the corner of East Caroon Delay and Palm Street or something like that. Wherever the popular corner is, where the popular strip mall is, right on the corner with excellent walkability. And you're like, I really want to buy that. I think that'll be a great location for my beauty or barbershop. Well, with that, if you come to TruFund for commercial real estate loan, you only have to occupy 25% of that space. And with the other 75% of that space, you can lease that space out to other small businesses that complement your business or not, but you can lease them out and then they'll be able to pay your mortgage and you can pay off your loan faster. How about that? That is an excellent opportunity for scaling and growth within your small business enterprise, within the growth, experiencing growth and scaling opportunities for your small business. Do we have any questions about that? No, no questions? All right, so let's talk about, are you ready for lending? What does that mean? So Mr. Brooks talked briefly about what you need, the documents that are needed to get a small business loan. So of course, we'll need 2+ years of personal and business tax returns. You need to understand your personal credit score, and you need to be able to produce a personal financial statement. Well, what is the personal financial statement, Sharonda? We don't know what that is. Well, I'm glad you asked. A personal financial statement is a financial statement that outlines your personal financial debt. If you have a mortgage, if you own a house and you pay a mortgage, that will go on your personal financial statement. If you own a car, the balance owed on that will go on your personal financial statement. Any personal credit card debt that you have, that will go on your personal financial statement. Those are things that will go on your personal financial statement. And I mentioned your personal credit score because, contrary to TikTok and Instagram and all these other places and people that come on Beyonce's internet to explain that you too can get $150,000 in business funding with an EIN and an LLC. That's not true. We are all going to look at your personal credit score, okay? But each entity has different requirements as for your personal credit score. Some will loan to you at a 600, like TruFund. Some will loan to you at a 630, 650, so forth and so on. Your legal structure and documents. If you are a corporation or an LLC, then you'll need your corporate documents, your active status with the Secretary of State. Any documents that you use to incorporate or create your LLC at the Secretary of State level, you will need those documents. If you are not an LLC or a corporation, first of all, shame on you, and we'll get you where you need to be. That's why you're here today, to learn what you need. If you are a DBA, meaning you went down to the county, got a DBA to the county or the parish, and got a DBA to start your business, that is a step in the right direction, and we can take you further to grow your business more. So if you did go down to the parish and get a DBA to operate your business, we'll need those documents as well. Another thing you'll potentially need is collateral, folks. Some loans will require collateral. If you are purchasing commercial real estate, that comes with built-in collateral. That means that the piece of commercial real estate that you're purchasing will be the collateral for the loan, okay? In some cases, depending on the profitability of your business, again, and your documents, and your revenues and your income, some entities may require you to put up some collateral. And collateral could be a large piece of heavy equipment that you use for your business, any vehicles that you may use for your business. They may take those as collateral if it's necessary. Every small business loan does not require collateral, okay? Each owner with 20% ownership must provide tax returns and other documents, okay? So if you own 79% and your BFF owns 21%, we're going to need BFF's documents, okay? If you are a small business and you own 50% and your husband owns 50%, we're going to need his documents, okay? Anybody with over 20% ownership. We're going to need your financial statements, your profit and loss, aka income statement. We're going to need your balance sheet. And here at TruFund, we want to look at your monthly cash flow statement. Raise your hand if you don't know what that is. Raise your hand. Raise your little virtual hand. Use the little raise hand function if you do not know what a monthly cash flow statement is. Okay, Ms. Fields, I'm going to explain it to you. Okay, your monthly cash flow statement is a statement of cash flow, literally. Your monthly cash flow statement shows all of the income that flows into your business bank account and the expenses that flow out. And at the end of every month, you should have a monthly cash balance, right? And that is an example of a cash flow statement. So over a 12-month period, let's say Ms. Fields, I'm not sure what type of business you're in. What type of business are you in, Ms. Fields?
Political lobbying.
Perfect. Okay. Ms. Fields she has a political lobbying business. Her business is most definitely cyclical. Okay. Her business is extremely cyclical. depending on if there's a presidential race coming up and the time frame of that, any local political elections coming up. So during that political cycle, she's probably usually super duper busy right before an election comes up, right? So in the maybe 6 to 8 months prior to an election, she's probably busy lobbying. She has lots of clients, and her revenues are off the charts. They are fantastic, right? But then in those months or years when there is no political elections, then her revenues are teeny tiny. They're smaller, right? So that, and if she is looking at her monthly cash flow statements, that can help her understand her highs and lows and her ebbs and flows of her monthly cash flow statement, right? And so when you are in a business that has cyclical cash flows up and down, and you're monitoring that, it helps you to do a couple things. It helps you to understand what your busy season, okay, your busy season. Then it also, you can plan. So when you're having those larger revenues coming into your small business, you can take out some and maybe put it in a small business savings account to help you when you're not that busy, right? So you can keep the lights on when you're not in your busy season. Let's say, for instance, so that was an example of Miss Fields' business. Same thing if someone owns a tax business or beauty and barbershop. Sometimes they can be cyclical too, because if back to school is a busy time for them. Around Easter. Everybody needs a new good Easter holiday haircut, good hairdo. You can get you a nice perm, a press and curl, something. Like so those can be cyclical businesses too. So understanding your cash flows could help you in your business to determine when you should save more of your business revenue so that you can survive and when your business is not is at its lowest. Okay. And also it helps lenders. We look at your monthly cash flow to see how much you can afford to pay every month. And we can understand if your business is cyclical. Okay. And you can use that to explain your incomes and your revenues for the year. Does that make sense, everybody? Do we have any other questions about monthly cash flow? Okay, we'll go on to the next slide. Well, that's not supposed to be the next slide. Give me 1 second. Okay, here we go. Okay, I probably need to share again. Give me 1 second. I do need to share again. All right. Everybody, can you see my screen?
Yes.
Okay, good deal. All right, so let's talk about the loan types and requirements, and more importantly, the TruFund difference. Okay, with our real estate acquisition loan product, well, we offer up to 95% LTV. Banks are only going to go up to 65 to 75% LTV. That means they're going to want 25 to 35% down. Other funds, such as the SBA and other lenders, other lending types, they may want 10, 20% down, and they want you to have a 680 credit score. And banks may require you to have a 700 credit score, right? With real estate acquisition lending, TruFund will go up to $5 million, meaning if you wanted to purchase a building, we can help you get financing for a commercial real estate building for up to $5 million. Banks, they prefer to do higher loan amounts when it comes to commercial real estate, and they require 51 to 100% owner occupancy. And there is a prepayment penalty associated with a real estate loan with banks. With the SBA, a prepayment penalty will be required, and they only go up to $2 million on real estate. For small business loan funds, TruFund goes up to 350, and we can do it on using secured, meaning collateral, or unsecured. Our minimum FICO score is 600, although depending on the type of business you have, your incomes, and the overall file, we could go as low as we could go lower than 600. Banks, they want you to have a 650 minimum, hard and fast, and that varies by bank. A couple of banks that I spoke with, they require 700 credit score, and their minimum loan amount starts at $500,000, and they want you to have deposits totaling over $1 million flowing into your accounts every month. Okay. There's no TA support, no technical assistance, no business advisory services, no pre, during, or post loan TA support with banks. With the SBA, they'll go up to 300. They require 680 credit score, 2 years in business, and they do have a prepayment penalty. For our contract mobilization loan fund, we'll go up to 500,000. Minimum credit score 600. Banks want you to have a 730 credit score. Some banks, not all banks. Some have a minimum $1 million loan requirement. They want you to have 4 or 5 years in business. They want you to be moving millions of dollars through your accounts every month. With the SBA, they'll go up to 500,000 as well. They want you to have a 680 minimum credit score, minimum 2 years in business, and they do offer some technical assistance support. Do we have any questions on this information, guys, ladies and gentlemen? Any questions? Let's see. Do we have any questions in the chat? Nope. Don't have any chat questions. Okay. Next slide. Okay, let's talk about the TruFund difference, everybody. The TruFund difference. What makes TruFund different? I don't know where that popped up again. So, TruFund offers business advisory services. And what do we include in our business advisory services? So our business, well, I don't know why that happened. Did I lose connectability? I did. Can y'all still hear me?
Yes. I can hear you.
Okay, thank you.
Mhm.
I lost, for some reason, I think my computer was trying to shut down on me.
Actually, that happened to me a few minutes ago. I lost you guys and had to reconnect.
Okay, I think I got it back. That was very odd. Made me a little bit nervous. Okay, so let's get back to the TruFund difference. Okay, so the TruFund difference, we offer, can you see my screen?
No.
No?
Nope, we are actually looking at you. And everyone, please remember, now is the time to ask all those questions that you have. You have the professionals here that can answer those questions for you.
Okay, we're back, I think. Can you see my screen?
Yes.
All right, business advisory services. So TruFund offers one-to-one business advisory services. So what does that mean? You can contact TruFund and you can, at the end, I'll give you a QR code, or you can contact me directly and you can get on my calendar for one-to-one business advisory services. We also offer assistance with your financials. Now, we're not going to do a deep dive into your financials. If you need a little more assistance, we have something on our TA side that'll help you. But as far as just helping you along with your financials, we definitely can do that. We have other resources that we can provide to you, such as our technical assistance resources that we contract with. We have 3 of them that we contract with, that if by chance a small business owner needs a little more support than our business advisors are comfortable doing, then we can refer you over at no cost to our resources. And we offer growth planning and strategies. So if you're a small business owner and you want to know how you can, if you're in a growth stage and you want to know how you can grow your business, scale your business, or even pivot to profit, honey, we can help you with anything like that. Okay. That's under our business advisory services. So for our technical assistance, we offer no cost national webinars. So we're partnered with the City of New Orleans Office of Economic Development to bring you guys this webinar. Well, TruFund has a suite of national webinars that we do with different partners. We'll bring on subject matter experts, other resources to assist, and they're offered at no cost. Again, we have the technical resources that I spoke about that we provide to you all at no additional cost. And we also have no cost in-person workshops. Yes, we do. Matter of fact, I will be there later on in October. I will be in New Orleans and Baton Rouge, bringing some in-person workshops for you guys. Ms. Fields, you have a question?
I do, and my apologies if it was already answered. So with TruFund, how does it differ from SBA?
Well, that's a very good
And
question.
or if, yeah, how is there any difference in between the services that you all are offering to small businesses? Or is there any time that a client may need to be recommended to SBA if you guys are unable to
If
not
TruFund is unable, when you say, okay, to give you a loan or just any business advisory services?
the loan portion of it?
Okay, so with TruFund loans, especially in Louisiana, if TruFund cannot give you a loan, more than likely the SBA is not going to give you a loan. Okay. Now, with that being said, we have referral partners. We have other CDFIs in the industry, and we have other lending referral partners because, and I'll tell you why. TruFund does not lend to startups. We are not a startup lender. But NewCorp is a startup lender, so we can refer you guys over to NewCorp, if you are a startup and you need funding. So another thing that people don't understand is a lot of times every CDFI doesn't do the same thing. So we're not necessarily competitors, we're collaborators, because there are things that NewCorp does that TruFund doesn't do, and vice versa. There are some things that TruFund does that NewCorp doesn't do, right?
And I just wanted to add to what Sharonda is saying now. TruFund is a certified SBA lender, and SBA only makes a strong loan stronger. So usually our first objective as a lender is always to get that SBA certification. But the reality is sometimes the loan may not qualify for that certification, and that certification protects the lender. And so we have products that kind of meet you where you're at. And so sometimes if you're not going to get a loan from TruFund, you're not going to get an SBA loan.
Right. Right.
Thank you for that clarification. And I don't mean to cut you off, Ms. Hill, because you were saying that TruFund does not fund startup businesses. For those who may be on the line that may be, what is the definition of a startup loan?
A startup business?
You haven't
done any business.
Based off the criteria.
You haven't done any business. You literally just started a business and you don't have any income, you don't have any tax returns. That is a startup business.
And we have Peter that can answer the question about the startup.
Yeah, for NewCorp, any business less than 2 years of age would be considered startup. So if you can't provide, let's say, 2 years of historical financials, you would be considered to be a startup.
Right. And for TruFund, same thing. Our sweet spot is to loan to companies that have been in business for 2 years or more. But here's the rub. So somebody could have started a business 3 or 4 years ago. They could have got an LLC. They could have, maybe had one transaction, and for whatever reason they didn't do any more transactions. But technically, they've been in business for 4 years. But for TruFund, they're still a startup, because they cannot produce 2 years of financials, right, for their business. Does that make sense? Okay. Do we have any other questions?
I think we had a few in the chat box.
Let me go to the chat. Thank you, Margaret.
You're welcome.
Oh, yes. Jasmine Pates. So Jasmine has a question. She asks, do we offer grants? And the answer to that question is no. We do not offer grants for small business owners, but we do offer. So if you were to come to TruFund and you're seeking business advisory services, or you want to talk about a loan, and let's say you're not ready, through our business advisory services, if there are any active loans that is available for your type of business, then I try to provide that information for our clients, whether we are able to give them a loan or not. Does that answer your question, Jasmine?
Yes, thank you.
You're
I'm just
welcome.
here taking in the information. I'm in two different situations. So one, I represent a nonprofit organization, and we purchased our first vacant lot through a auction. So we're in the process of trying to see if we can find grant funding or loan funding to get that new construction built to provide affordable homes. And then on the for-profit side, I have a LLC where I assist businesses with startup funding, and I'm a grant writer as well. So that's been growing as well. So I'm just here to take in the information and see what y'all provide.
Okay. So with that nonprofit, you purchased that lot for cash?
Yeah.
Okay.
How old is the nonprofit? How long has the nonprofit been operating?
Established in 2014.
Okay,
And we purchased the lot
it is
last
a
year.
housing developer?
Say it again.
Is the nonprofit specifically a housing developer?
We're not. We do HIV awareness and youth development work. So now we're trying to open another branch to provide housing for individuals living with HIV, or either, people affected by it.
Is that Women with a Vision?
No, it's not.
Oh,
It's called Do It For Me.
okay.
I like that name.
Yeah.
Thank you.
Yeah, you're in a little bit of a gray area for us, because we at NewCorp, we would fund housing developers. But because you're trying to do a housing development project, but you're not a developer, I would need to look into that a little further.
Jasmine,
I'm gonna put my cell phone number out here as well for anybody that wants to contact me after. But yeah, give me a call and let me follow up with you. To see whether or not I could help you with that.
Thank you very much.
Jasmine, are you guys wanting to build a single family or multifamily?
This project is a single family.
Okay. Well, great. Make sure you grab Peter's information so you can connect with him after the call. Okay, Kim, you're welcome. Kim Washington wants to know, Kim, you said, do you have a calendar of upcoming webinars? So for TruFund, yes. I'll give you guys my information when I'm done with my presentation, and we can send you our upcoming events. Let's see. Veronica says TruFund is a certified SBA lender in Louisiana. Yep, we are. Oh, yes, that is great information. Ms. Fields, thank you for giving Jasmine that information because um I was actually going to suggest that she see if and I'm not sure if you guys have them in Louisiana, but there is so in Texas we have like Houston Land Bank. There may be land banks in over in Louisiana in different parishes that you can contact that can help you with that as well. So that's always an option, right? So thank you for that.
And Peter, Mr. Johnson said that he find himself in the gray area as well regarding the housing development. So he'll probably be reaching out to you
Yeah.
also.
Okay, that's fine. My number is on the chat for anybody that wants to talk to me about your specific situation.
That's fantastic. And Kim Washington asked, what is our debt service credit ratio requirement and current rates? So our DSC requirement is 1.1. And if you're wondering what does DSCR means, that means for every dollar that you borrow, you bring in $1.10 in revenue. Does that make sense? And she also asked what our current rates are. Well, rates fluctuate, but right now here at TruFund, our rates start at, I believe it's 8 or 9%, and that's where we're at for our starting rates.
Yeah,
But
and
rates vary based on the day it is, because they can change every day, and two, how strong of a borrower you are. So that determines your rate.
yeah, and at NewCorp, our rates are in a similar range between 9 and 12%. And our debt coverage ratios could be as low as 1 to 1, or a minimum of 1.1. It depends on the nature of the business. For example, in the contractor loan program, we will go 1 to 1. But any other business, we probably go as high as as low as 1 to 1.1 to 1.
Okay, moving on. So let's get to the tips portion of my presentation. So it takes effort to obtain a loan. It is not easy. We're not merchant cash advance lenders, okay? You can't come to us and be like, hey, well, now I'm saying us, but let me refer that back to TruFund because I heard Peter say something earlier. He said that NewCorp can possibly get you a loan in 3 or 4 or 5 or 6 days. Is that true, Mr. Brooks?
Yeah, it depends on the nature of the loan. If it's a small loan, straightforward, and you got all your financials in place and your credit is good, then yeah, we could probably turn it around within a week. But
what's your minimum loan amount?
10,000.
$10,000.
Yeah, but most of the loan applications we see are of higher amounts and not so straightforward as it relates to the documentation. So yeah, a little more time.
Okay, guys, you heard it here first.
Yeah.
You heard it here first. NewCorp can do loans of as low as $10,000, and they can turn it around in a relatively short time frame. But here at TruFund, our minimum loan amount is $50,000, and we cannot give you a loan in a week. So that brings me to my next point. Your credit score will directly influence your ability to secure a loan, okay? Your personal credit score, not business credit. Don't believe the hype. 3, build your professional team. Find yourself a CPA, not Miss Laura on the corner who does taxes, okay? Miss Laura on the corner who does taxes is going to have you not able to get a loan because she's going to be writing off all your revenues, trying to get you a refund when that you want to be well positioned for a loan. Do not get yourself a CPA, someone that can help you with your tax strategies and planning, okay? bookkeeper, tax planner, attorney, banker, insurance rep, advisor, mentor, coach. Always talk to your banker or financial person about lending. Because here's the thing. If you are operating a pretty successful business, it's not a question of if you're going to need funding, it's a question of when you're going to need funding. And you want to be in a position to move before you actually need the money. Okay. I can't tell you how many times I've had clients who come to me and like, oh, I need a loan like yesterday. We're trying to do A, B, C, D, and it just doesn't happen that way. Okay. Again, talk to a banker or business development officer before you need the loan. Understanding your use of funds, okay? Do not go and apply for a loan and have your interview with TruFund or Mr. Brooks over there at NewCorp. And when we say, well, how much are you looking to borrow? And your response is, whatever you approve me for, that's not going to fly. And you probably won't get approved because we need people to understand what they need this money for. We need them to understand that it's going to work for them, and we need them to understand that they're going to need to pay it back. And if you don't understand your use of funds, that could be detrimental to your loan process. Be organized and know your numbers. Be organized. Create that Stay Ready package I told you about earlier. You will receive a copy of my presentation, okay? So that you can refer back to it, those documents you need, because you're going to need those documents for lending, insurance, as well as if you want to get certified for your get your business certified, meaning women-owned certification, minority certification, small business enterprise certification. Any of those certifications, you're going to need those documents, okay? And don't give up if you get denied, okay? Be persistent, guys. Be persistent. Howard Schultz was seeking an investment for his coffee shop dream and was denied over 200 times. FYI, Shaq wouldn't even invest in his coffee shop dream. If he had given up, there would be no Starbucks today. Okay? So keep moving forward. If Walt Disney had quit too soon after his theme park concept was rejected 302 times, there would be no Disneyland. Okay? All the quote from Walt Disney, all the adversity I've had in my life, all of my troubles and obstacles have strengthened me. You may not realize it when it happens, but a kick in the teeth may be the best thing for you, may be the best thing in the world for you. So be persistent, folks. Okay, I'm going to give you a little bit of homework, and this is capital readiness homework. I want you to identify one loan and one grant you may qualify for. You can call me, set an appointment, and we can talk about it. I want you to download your personal credit report. You can go to annualcreditreport.com. I want you to organize your business document. That list I just told you about, that Stay Ready package, the documents you need to apply for a loan. And I want you to draft a potential use of funds one-pager. Okay? Okay. Do we have any questions? Oh, we have one on the chat. All right. So thank you for your time and attention today. My name is Sharonda Hill, AVP and Market Manager for Louisiana and Texas at TruFund Financial Services. Here is my direct phone number. Oh, let me use my mouse. Y'all don't know where to point it. Here is my direct phone number, and here is my direct email address. Please scan the code for a link to get on my calendar. Once again, thank you for joining us. Thank you, Margaret McGee, for having me here, and I appreciate your time and your energy and your support. Thanks, everyone.
Thank you. Thank you. Any last words, Pete? I know you said you have to jump off.
Yeah, I've got about 10 minutes, so.
Okay.
Yeah, good.
Well, do we have any other questions? Going once, going twice. Okay. I want to thank both of my speakers, Miss Sharonda Hill and Mr. Peter Brooks, for those awesome presentations. Within 5 to 10 business days, this session will be added to the Office of Economic Development YouTube channel. Our next session is Tuesday, September the 23rd. Our speaker, it will be Miss Ramona Sanders with Hope Credit Union, and Miss Almer Brown with Lift Fund Louisiana. Please check your emails for reminders, and I hope you'll be able to join us then. Everyone have a great day.
Thanks,
Thank you.
everyone.
Thank you.